Hey guys, and welcome to the Working Money channel. I have seen multiple comments on my timeline saying how bored people are right now with crypto, or how done they are with it. People are genuinely throwing the towel in because we haven't mooned in a couple of weeks. I feel like this is the calm before the storm, guys. This is coming from Crypto Insight UK here on Twitter. And I feel like, today marks the, the 1 month anniversary since we did get Judge Annalisa Torres's verdict for the XRP lawsuit. And a month ago, we saw a lot of action here, got a lot of people excited. You can see that obviously denoted here in the large green candlestick for XRP and the large volume bar here. A lot of people were buying up XRP in anticipation that this was going to be it. Well, since then, we have seen a bit of a downturn for XRP, but it is forming a bullish pennant pattern, which is generally pretty positive news. We have not broken former resistance that we've seen down and around here. I mean, if XRP goes down as low as 55 cents, somewhere in this range here, 55, 56, 57, give or take, if it breaks down below there, that's not looking good. I'm thinking worst case scenario, we would see it kind of base here before it moves up again. Hopefully we stay above that level though. But people are feeling pessimistic and guys, this is going to take time. Realistically, if you take a look at the crypto market historically, I'm going to bring up the total market cap here and let me just bring up the last bull run. The last time we saw those all-time lows before an all-time high was down in and around late 2018, early 2019. Down in and around here. And from there, guys, we did see a move to the upside coming into the summer of 2019. So this would be the equivalent of where we are today. 1 year after a full year of bearish momentum. The following year, we saw a bit of an uptick, but that was not without a bit of a downturn shortly thereafter. So if we were to equate these 2 years, this would be the equivalent of 2023. And we did see the total market. This is the total market, guys, by the way, on the daily. We did see it go down over 50%. So even if we do see, the market move up a little further, and I got some predictions with regards to this, even if we did see the market go up to, 1.6 trillion. Right now it's hovering at, where is it right now? Right now it's at 1.17 trillion. So even if we added $5 billion to the market cap, realistically, it's not out of the cards that we could see a decline. I don't know if it's going to be 50% or what, but, the market tends to rhyme and, it's not going to be until 2024. I don't think until we reach these all-time highs, match these all-time highs at least. Here's one from Stock Money Lizards on Twitter. Bitcoin, our outlook, 2023 peak target is $50,000, okay? And then 2024, pre-halving, the consolidation time. 2024, post-halving, we will see a new all-time high, and then 2025 to 2026, that will be the cycle peak. Then by 2026, the beginning of 2026 onward, I guess they're projecting here is going to be the next bear market. Guys, this has all happened in cycles in the past. And so, when you look at former Bitcoin cycles, you can see where the halving is. Now, the next halving is happening in April 2024. And you guys can see that here. We could, in fact, witness a downturn before the halving. Then Bitcoin is going to match its all-time high, so $69,000, $70,000 after that halving period. So we still have about a year to go, just less than a year, about 9-10 months to go before we see crypto even getting close to that point. So just to my point here, guys, people are bored now. Well, we've got to be patient. This is a great time to be accumulating, and I'm on a constant lookout for new coins for my patrons, because even if you didn't buy at all-time lows, it's still a good time, I think, in my opinion, to get into certain cryptocurrencies that could in fact pop. And I'm going to be looking at different metrics, trading metrics specifically, metrics that would allow for more volatility in cryptocurrencies, not necessarily the real-world utility, which is going to play a larger role down the road. So that is one theory of thought. But guys, this bull run, we're trading for profit. So diversifying, if that's something you're interested in, $5 a month. I'm going to be talking about that a little more in the coming weeks. I can believe it though, people just not interested because there's no excitement yet. But Coinbase and Gemini have both relisted XRP. This coming from Rob Art here on Twitter. Users will now be able to FOMO into the euphoria stage with great ease, thereby propelling the price upward. I could not agree more. So right now they're setting up the environment, setting up XRP, specifically XRP, I got to say, because all these exchanges now feel confident because we've got the lawsuit verdict. Even though fear and greed index is neutral at around 51%, these guys are working overtime to get their exchanges ready. So Robart retweeted out Tyler Winklevoss. XRP is now available on Gemini. It's important to note how we got here. Instead of creating clear rules for crypto, the SEC has resorted to suing everyone. It lost its case against Ripple, and the judge provided clarity when Gary Gensler wouldn't. So guys, this is a big step in the right direction for crypto, and more importantly, for XRP holders, because the euphoria stage, we're going to get up past. I have a feeling, and I mean, I wouldn't have said this unless the case did play out as it did. We might actually be, guys, XRP might actually be one of the best performers in this coming bull run just because of the clarity and the sheer confidence now that American investors can have in this particular cryptocurrency. We could not get past all-time high here, but at this point, we were in the midst of a lawsuit, and XRP only reached about $1.97, not even breaking $2 per coin. And right now, we're seeing XRP trading just shy of 63 cents. So, guys, this is going to be interesting, and I'm going to be trading my entire portfolio on my Patreon. I'm going to be showing you guys over the months what I'm trading, even my XRP, guys, even my Bitcoin, all my coins. I've decided all my coins open for business. So again, if that's something you're interested in, $5 a month, I think it's pretty good value. If you ask me, going to keep moving, guys. Michael Branch posting this, using courts for every crypto issue will squash innovation. This coming from Michael Sonnenschild, the Grayscale CEO. He emphasized the need for a balanced regulatory approach to cryptocurrency to avoid hindering innovation in the United States. So, you know, we're even seeing CEOs coming out and saying, guys, the SEC is full of crap. Why are we taking their crap? Why are we continuing to take their crap? During a recent interview with Fox Business, Sonnenschild expressed that the SEC could drive crypto firms out of the country by constantly resorting to enforcement action. He said, if every crypto issue needs to go to the court of law, then as a country, we are squashing the innovation taking place here. Sonnenschild reiterated that the industry needs distinct definitions for crypto commodities and crypto securities, as well as clearer regulatory guidelines for stablecoins. He believes this will prevent businesses from relocating outside the U.S. He added, adding further clarity to this would ensure that companies and people working on crypto don't leave the U.S. because our regulatory environment is hostile towards the asset class, but instead embraces it. Despite his criticisms, though, Sonnenschild remains optimistic about the ongoing efforts of Congress to provide regulatory clarity for the industry. He went on to say a lot of this legislation that this Congress could very well pass could give the industry the actual clarity it needs to move forward in a way that embraces crypto. So he is remaining optimistic. Recently, we did just get news in the Coinbase case against the SEC. When Coinbase filed its motion to dismiss the case brought by the SEC, honestly, at first I was skeptical it would work, but now I'm seeing real momentum in support of Coinbase, guys. This coming from Yassine Mobarak here on Twitter, retweeting out Meta Lawman's tweet, okay? SEC versus Coinbase, guys, this is a big update. 6 securities law scholars filed devastating amicus briefs in support of Coinbase. Law professors from Yale, University of Chicago, UCLA, Fordham, Boston University, and Widener, they all filed amicus briefs last night that absolutely shreds the SEC's investment contract theory. The amicus brief brilliantly traces the history of the meaning of the investment contract before, during, and after passage of the Federal Securities Act in 1933. Here are the scholars' conclusions. So, number one, by 1933, the state courts had coverage around a standard for interpreting the term investment contract to mean a contractual arrangement that entitled an investor to a contractual share of the seller's later income, profits, or assets. So really dissecting this and giving us a good sense of where their heads were at in 1933 and how that does not apply today. Number two, after the Howey decision in 1946, the common thread for investment contracts remains that an investor must be promised by virtue of his or her investment an ongoing contractual investment in the income, profits, or assets of the enterprise. And number three, every investment contract identified by the Supreme Court involves a contractual undertaking to grant a surviving stake in the enterprise. So bottom line, in my opinion, this amicus brief delivers the coup de grace or coup de grace to the SEC's argument that crypto tokens trading on secondary markets are investment contracts. So as Yassine Mobarak here says, real momentum for Coinbase. The amicus briefs filed by everyone from crypto lobby firms to legal scholars to prominent institutions to a sitting U.S. senator, all in favor of the motion to dismiss the case, are causing a real snowball effect. A snowball effect, you say, perhaps being triggered by the XRP Ripple lawsuit verdict. Things that make you go, now looking at this several years later, John Dean also commented, Dave, as usual, is 100% in his analysis below. The court would have to ignore the common enterprise factor of the Howey test. The SEC ignores this factor, and you can see that in the footnotes, but the Supreme Court requires it. In order for the SEC to win against Coinbase, the Howey test and the policy behind the test would have to be ignored. So just another example here from Dave Weisenberger. The Coinbase case is a much clearer example of SEC overreach than Ripple, as Coinbase had no financial interest in sales of tokens alleged to be securities. So basically, the SEC is reaching here, and all these scholars and prominent figures are looking at this and saying, now, this can't pass. I mean, when we just take a look at the law, when we just take a look at, what was written in Howey, if that's what you're going to use way back then, this does not confirm anything. It does not solidify the SEC's arguments at all. And so, Congress really does need to step up. I guess it's up to them really at this point to see if changes can be made. And, even John Deaton famously said, we might not see anything meaningful until 2025 at the earliest. So, perhaps another bull run underway. Without crypto clarity, this could be good for us guys, but I have a feeling this might be the last bull run where we are, trading in this kind of environment that will be relative, dare I predict, relatively predictable, similar to, former bull runs. Again, this might be the last bull run that is similar to previous bull runs, but I'm not taking any chances. This is why I'm diversifying and, deciding to share my trading portfolio with you guys, because I feel like I've been with you guys for so long now. Haven't really been talking about my trades. And, I almost feel like this is a bit of a, fun journey that we can take together, kind of, charting unnavigated territories, cutting through the crypto regulation crap on this new journey. And, who knows what the SEC will throw at us next. Anyway, wanted to thank John Deaton, obviously bearable guy here, Meta Lawman, Yassim Mubarak, and Bill Morgan here also posting this. Just one last thing about that. Okay, how about these terms? This ODL customer contractually represented it was not investing in XRP or expecting profits and agreed to solely use XRP to transact payments over ODL. How does that satisfy the Howey test? So just another example here using this terms and conditions of purchase, a customer using ODL specifically, but she did not explain why she did so and why this category of sales were investment contracts. Where is the promise of share and profit? How is there an investment? It was part of the undisputed record of these ODL users sold or exchanged their XRP in seconds. A Dingo Ate My XRP responded here, my only guess, and it's a wild guess, is that making a distinction between ODL and institutions or institutional would introduce subjector buyer motivations into the Howey analysis. Since the SEC hung their hat on the objective a reasonable buyer, Torres wanted to kill appeals so as not to harm retail. And Bill says it is not subjective motivations. These were specific contractual terms obligating this ODL customer to use XRP for ODL payments. That was the economic and contractual reality of that customer acquisition and use of XRP under that contract. So other people speculating just on other aspects of this. So wanted to thank Bill Morgan too for posting that. Now, we talked a little bit about stablecoin regulation and how that could, in fact, also change the game a little bit. Stablecoin regulation good for dollar adoption globally, says the former Binance US CEO, Brian Brooks, who is also a former CFTC chair. He believes that stablecoin, or rather clear stablecoin regulation, benefits the US dollar. Generally speaking, Valor Capital Group partner Brian Brooks believes clear stablecoin regulation benefits the US dollar, even as some US lawmakers argue it could be harmful to the financial system and economy. Well, you got to think, right? If a stablecoin is free and clear to roll and it is pegged to the US dollar and, the US has greenlit it, well, you got to assume the rest of the world is probably also greenlit that same stablecoin. If we were to take the assumption that many other countries are further ahead with their regulatory clarity, well, that would mean maybe more people would in fact adopt the US dollar or a proxy US dollar, i.e. a stablecoin. If only the US government would create a framework that allows dollars to back stablecoins in a regulated way, that demand would flourish, said Brooks. That would be good for the dollar adoption globally, but as long as we're allowing governments to suppress stablecoins, you have the sort of push-pull phenomenon, which is what creates the problem. Stablecoins are crypto assets, usually tokens pegged to fiat currency, as we know. Brooks down here then said, demand for stablecoins are a way for us to make the dollar relevant again at a time when governments around the world are looking to decouple from the dollar. So another interesting perspective here from Brian Brooks. And decoupling from the dollar is becoming easier and easier. Here's somebody speaking at the Medico Talks podcast. Okay, we know Ripple owns Medico, and Medico is in the custody business. Blockchain is going to be a key infrastructure for the future. And this is why these BRICS nations can confidently say, well, we just want to decouple from the US dollar. We want to use our own thing. Guys, listen to this.
The bottom line then is basically that we see, okay, we have strong regulation for crypto assets, Germany particular, upcoming in the European Union, but it must be clear that the typical or traditional financial instruments will become more and more tokenized, and therefore blockchain will be the key infrastructure emerging in the upcoming years.
Everything is becoming tokenized, and blockchain technology is going to be part of that key infrastructure. I think it's important to note that this is coming from a talk presented by Medico, now a Ripple company. So wanted to thank Cypress Domenencourt here for posting that. Also this from ISO 20022, Let's Do It. Even competitors like JP Morgan are saying, essentially in a roundabout way, the ISO 20022 migration, this is the new standard for financial payments. It also has a lot to do with DLT and blockchain integration. Well, here's what they had to say in a press conference, I guess some kind of online forum here. Listen to this.
We should underestimate the complexity involved here. From our perspective, what we are saying to clients is we don't have any specific requirements because of our migration. We can accept MT messages, we can accept MX messages, we can provide MT reporting, CAMT reporting. So it really depends on when clients are ready for it. But I would say one more piece of advice to our clients is that don't wait till 2025 to migrate, right? The sooner you do it, the more you use tools like My Standards on Swift, you will be better off with the migration.
So JP Morgan essentially saying to their clients, do not wait. You need to be on the standard, and sooner rather than later. That is probably better. So wanted to thank ISO 20022, Let's Do It, for posting that. Banking regulatory requirements are changing too, and I'm not going to spend a lot of time on this, but just to kind of give you guys a sense, the Banking Secrecy Act has been amended as of August 2nd, 2023. So just about a couple of weeks ago, what you need to know. And they're not getting looser, guys. Due diligence programs for correspondent accounts and foreign financial institutions. Prohibition on correspondent accounts for foreign shell banks. Number 3, reporting obligations on foreign banking relationships. Number 4, summons or subpoenas for foreign banking records. As you guys can see, they're cracking down. They're really tightening the rules when it comes to foreign banking transfers. Number 5, due diligence programs for private banking accounts. And number 6, special information sharing procedures to deter money laundering and terrorist activity. So this has to do with the FDIC, Financial Institution Letter, Bank Secrecy Act, Anti-Money Laundering Examination Manual Update, and they just updated that this month. So you can probably see or have an inclination of where this is going very, very soon. Wanted to thank Mr. Mann for posting that. Now, if this is moving in this direction, if even banks like JP Morgan are saying, get on the 20022 standard because, you just don't want to be left behind. And we know about Ripple, XRP, of course, and their relationship with central banks. Just yesterday, I did a video highlighting a new relationship, one that we, it's not a new relationship, but it was one that we hadn't heard of yet, New Zealand. If you guys didn't catch that video, I will link it up here in the top right-hand corner. We also discussed Ripple Prisma, and David Schwartz gave us a little insight on what that was too. I did that in the same video, so if you guys want to check that out, you can check it out there. Medico talks, they're saying key infrastructure for this new financial system, blockchain, all things that really shouldn't be a surprise for us. So how much XRP really is going to be needed for this financial system? Well, Zach Rector here retweeted this out. We have been warning about a supply shock incoming for XRP. Unless Ripple starts selling to exchanges again, we might have a problem. Remember, programmatic sales ceased in 2019. I think it was 2019, or was it 2020? So now, and the other thing is, think of all these exchanges that are now relisting XRP, okay? Before, when these exchanges were not trading XRP, it wasn't a problem. We only had maybe 1 or 2 exchanges in the US. I know Uphold is definitely one. I don't know if there were any others, but only one exchange then, I guess, in the United States that was trading XRP at that time. Well, if all these other exchanges are now going to come online, they're all going to need XRP, right, in their coffers so that we can trade it. Well, guys, here is a list from Kankspace here on Twitter. Don't wait till it happens. Some numbers here from July 25th. Proof of reserves, XRP public liquidity. Okay, we've got Upbit here, and they're a Korean exchange. 3.8 billion XRP. That is the biggest, and the biggest by far. Okay, Kraken has about 541 million. Binance has about 494 million. BITRUE has about 225 million XRP. Crypto.com 205. Bittrex 157 million, Bitfinex 118 million, Coin1 only 42 million XRP, Bitstamp 36, Uphold 18, Coinbase 10, Binance US 10 million, ZB.com 1.5 million, and HitBT only 500,000 XRP. Now, when you add all this up and you consider the XRP in escrow and the XRP in circulation here, guys, and the fact that Ripple stopped selling XRP in 2019 and the remaining XRP is being used for ODL, what's the final verdict here? Only less than 11.3%. So just over a tenth, guys, of the XRP supply is available to the open market. Now, we know some of these ODL clients already hold their XRP, but this is not everybody who's going to use XRP, and this isn't even a fully complete list of all the exchanges. Somebody in the comment section did mention down here, it was, what about Gemini? Gemini wasn't, or where is that comment? I can't see it now, but somebody was asking about Gemini. Gemini isn't even listed on this list. So you can imagine how many other exchanges are probably not, because this is just a handful of exchanges. Even if you go to CoinMarketCap here and click on exchanges, you can see there's a list of tons of different cryptocurrency exchanges here, from many different countries all around the world. There's a list of 60 right here, and you can show more, and you can see there's even more. So think about all these exchanges that are going to, or they're going to have a reserve of XRP. And when you take a look at the list and realize, even just looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 of these exchanges, just accounting for these 14, we only have 11.3% of XRP supply available. What is that ultimately going to mean for price, guys? Once the FOMO does kick in, I got to hand it to Rob Art for pointing this out. The relisting of XRP is going to be crucial for Americans trading in this next bull run. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.